Your stock research tool might be making you feel confident while quietly costing you money. I put Seeking Alpha and Motley Fool head to head, paying for both and testing them side by side. Some results were expected. Others completely changed how I pick stocks. Let's dive in. So, when I'm deciding on any investment platform, I don't just look at the marketing pitch. I go straight to the user reviews, the one-star ones first. Because if there's a deal breaker, that's usually where it hides. Starting with Seeking Alpha review, one user said that he signed up for their $4.95 intro offer, then got hit with a second bill for over $500. He canceled right away, went to the BBB, even contacted Visa. Now, billing issues like that sound alarming, but I think this was one of those rare cases where something slipped through the cracks, maybe a misunderstanding on renewal terms. But if you ever find yourself in situations like this, your credit card company can reverse the charge. But from what I've seen, most people never experience this problem. It's not a pattern in the thousands of reviews out there. Nevertheless, an abundance of positive feedback reveals why so many investors stick around. One user called Seeking Alpha the best site of its type, with an outstanding wealth of knowledge on their premium service. Another investor said that their exceptional newsletter, data feeds, and tools had led to solid success in his portfolio, and he loved the news feeds and investor opinions. When you see that level of trust, it balances out the occasional complaint. Now, when I looked into the Motley Fool reviews, I came across one negative Motley Fool review from an investor who said their recommendations were often wrong, and that after years of holding some of their picks, most were very low. That's frustrating, but here's the thing. Motley Fool is a long-term buy and hold service. If you're checking results in the short term, you might be disappointed. I've found that their real value shows up in years, not months. And plenty of other investors leaving reviews back that up as well. So there's this one-time podcast listener who said that he'd subscribed, found an enormous amount of resources, and learned how to invest without having these knee-jerk reactions. Another novice investor said that he got in on a discounted first year, learned a ton from their deep dives, and was ready to resubscribe at full price. So when you see loyalty like that, it's clear that the service is delivering value to the right type of investor. So after digging through all of these reviews, I actually wanted to see for myself, So let's start with Seeking Alpha's symbol summary pages as the first thing of note. These became my go-to almost instantly. So instead of bouncing between 10 tabs, I could type in a ticker and get everything. Fundamentals, valuation, momentum, and sentiment all in one place. So for me, it meant faster, clearer decisions. Then there's the virtual analyst reports. I can't overstate how much time these have saved me. They take complex financial data and distill it into actionable insights. I've used them to spot opportunities that I would have otherwise missed. And I like that they balance hard numbers with qualitative analysis there too. The portfolio tracking tools are another edge there. Seeking Alpha's quant ratings flag underperformers, highlight upgrades, and show how my portfolio, stacks up against the market or a specific sector. It's like having a performance coach built directly into the platform. And then there's AlphaPicks, their buy and hold portfolio. So since launch in 2022, it's up over 136% compared to the S&P's 49%. That's incredible. It focuses on quality, it reduces trading, and it lets winners grow. Numbers like that are really hard to ignore. So Motley Fool's approach is very different from that. It's less about data overload and more about focused stock recommendations through newsletters like Stock Advisor, for example. So when you subscribe to Stock Advisor, you're getting picks from two teams, Team Everlasting and Team Rule Breakers. Team Everlasting tends to recommend high-quality companies, often founder-led with strong pricing power and healthy balance sheets. These are companies built to last decades. Team Rule Breakers, on the other hand, is all about innovation. They look for first movers in important emerging industries, companies with big consumer appeal and strong management teams. These are the bold bets. And if you're worried about information overload, they've got you covered too. Motley Fool has a screener that filters through all their recommendations so you can find picks that match your investing goals, whether it's dividend stocks, growth plays, or something in between. And that's not all. I found the discussion boards surprisingly helpful. As a subscriber, you get access to premium boards where other members, and even analysts, chime in with updates, debates, and follow-ups on past recommendations. It felt more like a community than a data dashboard, but it's definitely very informative. I also appreciate Motley Fool's research reports tool. They take a deeper dive into specific industries or stocks, giving you more context before you buy. One unique thing as well is how Motley Fool ranks its recommendations. Analysts build sample portfolios and assign weights to their top ideas. These rankings are updated daily, and it gives you a clear sense of which picks have the highest conviction. It's a nice touch that adds transparency and helps you prioritize. For me, Seeking Alpha felt more like a toolkit for self-directed investors who want to dig deep and act fast. Motley Fool felt like having a mentor pointing you towards stocks to hold for years. It really depends on how hands-on you want to be. But no platform is perfect, and the Motley Fool and Seeking Alpha are not exceptions to that. With Seeking Alpha, the sheer amount of data can feel overwhelming, definitely, at first. But honestly, once I learned where everything was, that depth became a strength. With Motley Fool, you need patience. Some of their picks can lag before they pay off, so it's not for people who need quick wins. But if you're willing to hold, their history shows it can work out. Now, when it comes to pricing in this Seeking Alpha versus Motley Fool comparison, neither is bargain basement cheap, but both are reasonable for what they offer. If you're serious about investing, the cost can pay for itself many times over, too. Check the links in the description for the latest deals, because both run promos that can save you a pretty decent amount. If you want hands-on tools, real-time data, and the ability to analyze any stock yourself, Seeking Alpha might be your best fit. If you'd rather follow curated picks and lean on the expertise of seasoned analysts, Motley Fool could be your guide. Either way, the right choice could help you avoid costly mistakes and uncover opportunities that you've been missing. Check the link in the description to get started with our special discount and coupon.